Here are 3 ways to know a trend will continue using ICT Concepts. Number 1 is displacement. You must see a convincing move in that direction. Number 2 is the break of swing. It must close below a swing high or a low. Number 3, the fair value gap must be respected. The 50% level of the fair value gap is respected with a wick. Also note that a fair value gap is similar to a wick. A wick can be treated as a fair value gap. Looking at this 4-hour chart on NASDAQ 100, we can see that there was a fair value gap after a large displacement. And after this displacement, there was a break of structure. This swing low was broken. And inside of the fair value gap, price failed to break above the 50% level. And here you also see another break of structure. And then price goes back into the fair value gap, again respecting the 50% level. And this is where you can enter. You can enter off of this wick or as price moves back into the fair value gap. This also happens again down at the trend continuation. And as we see, if you stayed in this long trend, you would have been tempted to get out. But if you saw that this structure was broken, with this swing low breaking right here, then you will see that price comes back in and uses this wick as a fair value gap, and the 50% level is respected, and it continues lower. This happened back on the 20th of September. And on the 20th, you can see price broke structure, closed below a swing low with this displacement. Then price came back into this fair value gap, and it went just above this liquidity level, and then it took off to the downside. It closed below with the wick. You could have entered anywhere here. This is a stronger entry because it closed below with the wick. But this gave you more confidence after you saw the move down. And then you could come back in and enter here. Let's look at the other trend continuation. As you see, we're staying below this 20-period moving average. And moving averages do help keep you in a trend. You can also gain confidence that this is going to continue to move downward because you're below the 200-period moving average. But as we consolidate and price break structure here, this happened on the 26th. Let's look at the 15-minute chart. We see on the 26th, this is the same 4-hour wick marked out. And this is the 50% level, which is respected. But as you see, there's another wick and there's another fair value gap. This fair value gap has a 50% level, and that is respected with a wick. When price moves out and closes here, this can be your entry, but you can also wait for price to come back and try to touch the fair value gap again and then take your entry. All of these are kill zones. This is the London open kill zone. This is the New York open kill zone. And this is the London close kill zone. This is a 2 p.m. silver bullet trade that happens on the 20th. One last thing that can be a very useful tool into knowing that your trend will continue is using Fibonacci. If we take a Fibonacci tool and we put it on this first move, we will use the high and the low of this channel right before it closed outside of the channel. We can see that price actually went right next to the 1.27 Fibonacci extension. That gives you a clue to know the price will continue. And then when price comes back in and respects your 50% level, you know that it's going to head right back down to finish the job on the 127, and more than likely it's going to go to the 1.618. And that's where you know that you can at least get the liquidity taken below this swing low. I'll do another video on Fibonacci extensions and retracements and using ICT.